guys, Jared Wesley here of Live Traders, and this week's topic, the 3 pillars of trading success. The 3 things you must master, you have to master, you need to master to be a great trader. Trading is not an easy business. It's a very challenging business. It can be simple, but it is not easy. So today we will focus on the 3 things that you need to do to be the best trader you can possibly be. No fluff, all great knowledge. You'll end this lecture better than you started this lecture, and hopefully that will turn you into a better trader. If you like these kinds of videos, show a brother some love, click the like button, hammer the subscribe button. I am Jared Wesley of Live Traders. Let's get to it. Thanks for that introduction, John. I appreciate it. And obviously, you know, it sounds like a long time, an hour or 45 minutes, but it's really not that much time. I consider myself a little bit different than a lot of people you've probably heard speak. This is the first time I've done this summit webinar series, and hopefully it'll be a little bit of a breath of fresh air for you guys. I'm pretty harsh when I teach. You know, there's different types of, I always use 2 analogies. There's like the Zen master, Phil Jackson, and there's like your Bill Belichick in your face. I'm more the latter, the Bill Belichick, because I always tell folks I might be tough on you, but I can never be harder on you than the market is, period. You guys are up against the best there is. I mean, you're up against high-frequency trading machines, you know, Goldman Sachs, JP Morgan, et cetera. I used to work as a buy-side institutional trader on Wall Street over 20 years ago now. And trust me, they are cutthroat. More cutthroat than you could ever possibly imagine. I could tell you stories and you wouldn't believe them. That's how illegal some of the stuff is that happens. My point is these are the people that you are up against. And I tell folks that if you're going to do this, you're going to need some thick skin because you're going to have some trials and tribulations and frustrations. So where I feel like I'm different than most is, 1, I'm pretty hardcore. I don't like to sugarcoat things. And 2, I don't like fluff. Okay. For those that are in the chat room and have seen me or on YouTube, I go right at it, and we're going to do that today here in about a minute. I like to consider it 80 or 90% hardcore trading information and maybe 10 or 20% fluff. And I don't mean this as disrespectful to other people, so I don't want it to come out that way, but I usually see presentations that are the exact opposite. They give you 20% hardcore information, 80% fluff, but a lot of new people don't know the difference. Right? When you're experienced, you know the difference. You know what a sales pitch for an hour looks like versus actual trading knowledge for an hour looks like. I'm going to give you the trading knowledge, okay? And we'll spend 2 minutes on some offer we have for you because I want you guys to go out there and understand that this is challenging, probably the hardest thing you will ever try to do in your life. I mean it. Outside of being in the military, trading is probably the hardest career you could have chosen. But it also provides what? The most freedom, flexibility, greatest meritocracy, no boss. Like, you know, the last presenter talked about that as well, so I'm not going to, you know, harp on it. But that's why it's hard, because anything worth doing is challenging in life. So today we're going to talk about the 3 pillars of trading success. And these are 3 genuine pillars of trading success. This isn't like 3 slides where one says one pillar, the second's another, and the third's another, and we're just going to spend an hour talking about 3 slides. I have 30 slides to get through. 30. So we're going to have to get through it pretty quick. I'll save some time towards the end for questions. If you have some questions along the way, feel free to ask them. I'll try my best to get to them. But like I said, this is not going to be a walk in the park. Like, you're going to learn something here today, and you're going to walk out smarter than you did before I started talking. And I don't mean that arrogantly. I mean it in that this is a challenging business, and you're going to need to know these things. So let's get right to it. Technical charts, trade and money management, and psychology, right? All great traders understand charts, okay? Even the ones on Wall Street, trust me, they do. Everyone thinks Wall Street's just fundamentals. They're not, all right? High-frequency trading is a big part of trading these days, but most of the people that are really good at this, they're proficient in a lot of different areas, charts being one of them. And while the charts look complicated when you first start, when I first started trading, I thought, my goodness, what is this, like working at NASA or something? I really did. My first experience when I went to somebody's house, they had 5 monitors set up. I was like, holy shnikes, this is crazy. But it actually ends up being one of the easiest parts of profitable trading is actually the charts, right? The charts don't lie, and that's why we use them, right? Every time somebody places a trade, that trade forms a tick. That tick forms a bar. That bar forms a chart. That chart forms a trend. Those trends form patterns, and that's what we're after. You see, CEOs can get up on a stage and lie to you. CEO of Enron lied for weeks before that company went under, right? We just saw it with Silicon Valley Bank. Oh, we're in great shape. We're fine, guys. Bullshit. Sorry for the language, but that's the way I am, okay? Charts don't lie. Everyone's in them. From me, you, Michael Jordan to Warren Buffett. They're all represented in those candlesticks, and they don't lie, okay? Trade and money management. Charts don't mean anything if you don't have good money management. So for new traders, and we'll get into more depth with this in a minute, you need to manage your money. I see so many traders come in, and your expectations exceed your experience to where you're coming in, you have no experience, and you're risking thousands of dollars per trade. It's like, hey, if you just met Tiger Woods and you'd never played golf before, ever, you never even picked up a club, would you bet Tiger Woods $10,000 a hole? If you wanted to lose money, you would. But if you wanted to actually make money, that wouldn't be a very good bet for you. So why are all you new traders out there that are brand new to this business coming in risking hundreds, if not thousands of dollars per trade, and you don't even know what you're doing? So we're going to talk about money management a little bit later, trade management as well, because most traders are selling their trades too soon. They're cutting winners short and taking full advantage of their losers. You don't want to be in that position. And then, of course, psychology, because all of this up here is real nice and well and good, but if you don't have the mindset to accomplish and execute, then these things just don't matter, do they? Right? So understanding oneself is the single most important part of trading success. See, the problem people have is they think they're something they are not, right? Just because you're a patient person at Starbucks or Disneyland doesn't mean you're actually a patient trader. They're separate. They're different. No one's tapping you on the shoulder going, don't do that. Right? When you work and you do something wrong at a company or a job, your boss comes in and says, what are you doing? Right? You have to answer to that person. If you step out on your spouse is going to say, what are you doing? If you jaywalk across the street or speed down the highway, a police officer is going to say, what are you doing? Who's going to say, what are you doing when you trade? No one. No one. There's no one there. You have to be good enough to be objective enough. And let's be honest, most people are not very objective. Ask somebody if they're a good driver. They'll tell you, yeah. Well, that's impossible. 94% of people can't be good drivers, just like the last survey they just took. It's impossible. Okay? Are you a good tennis player? Oh, yeah, I'm pretty good. No, you're not. You stink. This is the problem with traders. They think they're better than they are because their ego is so big. Right? So we're going to talk about these three things today. And I think, to me, they are the three most important parts of trading. And I want to be very clear before I really dig in. I could spend hours, plural, on each one of these topics. I have about 30 more minutes to get through each three. So we're going to spend about 10 minutes on each. So if I miss something, it's not because I didn't want to teach it or I don't know it. It's because we just didn't have time to cover it. And for those of you that know live traders, I do weekly. Every Wednesday, I do a lecture that's an hour long. They're very similar to what you're going to see today in terms of quality and length. They're about an hour, and they're about 20 to 30 slides. Every week I give them. If you haven't checked out my YouTube channel, go check that out as well, because it's free, and who doesn't like free, right? So let's talk about technical charts, okay? At the end of the day, trading, it's just a game of statistical probability. That's it. No matter how good somebody tells you a pattern is, I don't care who it is, we're all the same with this. We all have a different approach to the market, which is wonderful, because there's a million ways to skin a cat, and that's great, because we're all a little different. But no matter how good a pattern is in a vacuum, it might fail. No matter how bad a pattern is, it might actually work. We're not interested in one or two trades. We're interested in the statistical probability over a huge sample size, hundreds, if not thousands of trades. Okay? It's like a casino. The edge is very small in a casino, but it's an edge. In trading, people are going to come in and say, oh, this works 97. Nothing works 97% of the time. Okay? Things work 90% of the time sometimes, right? But nothing works every time is what I'm getting at. Okay? So where I'm going with this is, you will take something that's perceived to be perfect in your trading plan, and it won't work sometimes. You'll take one of the worst trades you've ever taken, and it might work sometimes, okay? So in order to do this, understanding statistical probability, the one thing you need is consistency, right? You need to do the same thing every day, because if you're doing something different every day, there's nowhere to build from that, Okay, so most people overcomplicate the process. They're unorganized, they're inconsistent, and they generally quit out of frustration because they're doing something different all the time. The goal here is to do the same thing every day, because then you can build upon that. And by the way, you can use charts for anything. Okay, I don't care if you're charting the sales of pet rocks, if you're charting people's IQs, if you're charting the weather, it can be charted. And here's a great example of that. This is the Dow Jones Industrial Average from 1900 to basically 2020, okay? Everything we do can be charted. So when people look at red and green candlesticks, they go, oh, that's hocus pocus. That's BS, okay? And you can see that here. Everything that we teach is in this chart. Imagine that. Everything the market's done in the last 100 years are things that we talk about. Double bottom retest, climactic buy setups, breakouts here in the 1970s and 80s, another double bottom retest here in 08, 09, and then a rip over here where we get climactic. So these are all things that the market has been doing long before any of us were ever born, unless you're 121 years old, right? So when you look at this, it's everywhere you go, everywhere you go. Okay, so again, I'd like to spend more time, because when I teach the course, this slide's actually in our course, I probably spend 15 minutes just on this slide. But today we're going to spend about a minute a slide. All right, and everything's represented in these candlesticks, these red and green candlesticks. And here's the thing. Everybody immediately comes in and goes, oh, well, red is bad and sellers and it's bearish, and green is bullish and it's a bunch of buyers. And in theory, that might be right. But context is also what we're after. So when you see a red or a green candlestick, they're not all the same. Some have a bottoming tail, which would be this bar right here. Some have a topping tail, which would be this bar right here. Some are red, some are green. But where they happen and how they get there is just as important as what is happening. Let me repeat that. How a stock gets to where it is, as well as where it is on the chart, is just as important as the color of the bar. So if I saw 6 of these big green bars in a row up, green bar, green bar, green bar, green bar, green bar up, the novice trader will go, oh, that's bullish, I should buy that. So all the professional traders and experienced traders, you know, you guys have been there, right? Right? Where you look at a chart, like let's use NVIDIA, right? You look at a chart and you're like, who's buying that at $400? The novices out there. Those novices out there, when it's 19 bars in a row up and someone's still buying it, those are the people that don't know what they're doing, and we're about to short it and take advantage of those people. That's just the way it is, okay? So my point simply is, just because you see green doesn't always mean it's going to continue to go higher. It could be a blow-off top with huge volume. Just because you see red doesn't mean it's always bearish, right? It might be the bottom of an extended move at a prior support area. So when you see these, not everything is what it seems on the surface. Like, don't judge a book by its cover, all right? So again, normally I'd spend almost 20 minutes on this slide, because these tails, doji bars, this topping tail, bottoming tail here, topping tail here, wide range, these are very, very important in the context of becoming a great trader. We just don't have the time today to go in super detail about it. So let's take a look at a chart. This chart has a little bit of everything. Do you guys remember a second ago when I said if a stock's 6, 7, 8 bars in a row up, you need to look at it and think, sell. Well, here's a great example of that. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars up. It's tired. It just broke resistance right here, okay? And it's 9 bars up. You're going to get a pullback. How big that pullback is depends on how big the prior move was, how much volume's on top, how big this bar is. There's so many things that you need to learn, okay? Pulls back, chops around, and what happens here? 1, 2, 3, 4, 5, 6, 7, 8 red bars in a row, but where are they stopping? Right at an area where buyers stepped up before. So what really is technical analysis? It's using past price action to help predict future price movement. And nothing is perfect. Nothing will work every time. But that's why we have stop losses, which is the next chapter in a few more minutes. But you can see here, 7 bars down right here, what happens? It rips higher. But then what happens again? It goes 1, 2, 3, 4, 5, 6, 7, 8, 9 bars in a row up. It's tired. If you run a marathon back to back, you don't have much gas left in the tank. You're going to pull back. So these are areas you would not buy. You're going to buy on the pullbacks and sell at the tops. And we have 2 types of corrections. We have a correction through price and a correction through time. So a pullback would be a price correction, and this little consolidation over here, this right here, is a time correction. It's resting through time. All right, so we have buy setups over here, and then we have a breakout over here, and another breakout here, and another buy setup here. All right, so this is just a general chart that I pick, and you should be doing this for practice, right? Just pick a random chart and see if you can find areas where the stock should pull back or where the stock should bounce, or see if you can find patterns in that. All right, so here's an example of a breakdown pattern. Now, I want to be clear again. We would spend hours just on one of these patterns. So this breakdown pattern I'm showing right now, there's way more to it than what I'm going to talk about in the next 30 seconds. So you have a stock right here that we always start with the higher time frame, right? We never trade in a vacuum. We want to know what's happening on a 60-minute chart or a daily chart or a weekly chart or a monthly chart, et cetera, and so forth. And the beauty of these patterns that you learn are that they're viable and valid on any time frame. If you want to trade yearly charts, that's great. Each bar represents 1 year. If you want to trade 1-minute charts, great. Each bar represents 1 minute. I have a 5-minute chart here and a 60-minute. So the 60 minutes is going to give me my bias. The bias means, do I think the stock's going to go higher, lower, or sideways? And after I garner my bias from the higher time frame, I'm going to drill down to a lower time frame for an entry. So right here we have a 60-minute chart, and you can see it's starting to put in lower highs and lower lows, okay? And what's happening here is the stock's starting to trend lower, all right? But there's an area of support at 54.50 where this stock was holding. But once it breaks below this area, this support area, it's going to tank because there's nothing down here to prevent it from doing so. So it breaks below 54.50 and it drops. So our goal, our job as traders is to wait and be patient. When it gets near 54.50, wait for a pattern. And some of you are going, well, what if that doesn't give a pattern? Oh, well, next. Guys, there's 4,000 stocks out there. It doesn't have to be this one. So if it comes down to 54.50 and it doesn't give me this pattern right here, see right there on the 5-minute, if it doesn't give me this resting period, I'm just going to walk away or wait, keep watching it and see if it gives me a pattern later. Right? So right here, you have what we call multiple time frame analysis. This stock goes to 54.50. It gives us a pattern at 54.50. You enter at 54.50 or stops 54.65, and then you manage in between. I'm not talking about management because that's the next chapter, right? So that's how you do things, but you have to start with the higher time frame. If you don't have the higher time frame, then you're trading in a vacuum. And what happens when you trade in a vacuum is you're basically looking at what? The forest from the trees? No, you're basically stuck on one branch, one piece of bark, one leaf, right? You can't do that. The forest might be on fire all around you because you're so focused on one leaf. You need to get up into a helicopter and look down at the forest and go, okay, where's the bad spots? That's what the higher time frame does for you, okay? Here's another example of a completely and totally different pattern, all right? It's a double bottom retest, right? We have a bottoming tail that bounces, pulls back, another bottoming tail. So you have an opportunity here. You can either buy the first pullback, because this is what we call a parabolic or climactic move. All the people who wanted to sell this stock, they sold it. How do we know? Look at the size of the bars. Look at yesterday. Look at the size of those bars yesterday. What are they? 20 cents each? Look at the size of the bars today. They're like $1 each. Look at the volume yesterday. Look at the volume today. All the people that want to get out of this are getting out of it right now. You can see this by the angle of the retracement, the level and depth. It dropped from $33.50 down to $28, and it did so with super wide range bars, but not one, not two, not three, like 7 or 8 of them. Then what do you see at the bottom? Capitulation, right? You see a bottoming tail on massive volume. So all the people that wanted to get out got out, and buyers, bargain hunters are going, ooh, yes, please. So they start buying it up. But I might want to wait for more confirmation. You don't have to be the first person in to make money. You don't. Okay? So be patient. You can get in right here, where my cursor is right there, or you can wait for the retest. The retest is safer, but not guaranteed. And what I mean by not guaranteed is you don't know if the retest is even going to happen. So you might want to nibble a half of a position right here, and then if it does pull back, add back. And then you're going to look for a 50% retracement back up. That's technicals, guys. And that's about the fastest I can try to explain technicals. You're going to be using these red and green candlesticks to find areas of support and resistance, supply and demand, fear and greed. And you're going to be using the size of the bar, the volume, bottoming tails, etc. Notice there are very few indicators. There's only one indicator on here, and it's a 20-period moving average. I think it's a 21-period moving average. I don't use, other than trend lines and moving averages, I don't use a bunch of indicators, stochastics, Bollinger Bands, Fibonacci. I don't use them, all right? Because charts are the most important thing out there, which means price. Price and volume are the two most important things you'll learn in trading when it comes to charts. Price, which is the candlesticks, and volumes. One tells you what is happening, that's price, and the volume tells you how it's happening. So price tells you what's happening, higher, lower, sideways, and the volume tells you, is it happening with commitment or a lack of commitment? That's what it's telling you on the chart, okay? We got to move on. I apologize, but we just got to, all right? Trade and money management. Look, live to fight another day. I tell people this every single day every single morning. I tell you guys that are new, I say, if there's anybody new in the chat room, please risk $5 or $10 per trade. What that means is if the trade doesn't work, you lose $5 because you just don't know what you're doing when you're new. So why would you lose money unnecessarily? I don't care if you're Jeff Bezos or Bill Gates. If they came into my chat room, I tell them the same thing. Why are you guys unnecessarily losing money? To what end? To what purpose? No, you're not going to get rich quick in 3 months. I'm sorry to bust your bubble. If you're not going to give this business 1 to 3 years, don't start. Let me repeat it so you guys can log off now. If anyone else before me or after me says otherwise, run. Don't walk away from what they said. Run from what they said. This business takes at least 1 to 3 years. Sure. Will there be an exception to the rule and someone gets it in 3 to 6 months? Sure, but you're not the exception. That's the exception. That's the exception. But you all think you're the exception. That's the problem. It's like 94% of people thinking they're good drivers. You're not likely the exception. So don't act like the exception. Look at it like this. Best analogy I can give you, and I got to get through it quick. You're on an airline. You're flying somewhere, and the flight attendant comes up to you and says, Mr. Smith, this is going to be an 8-hour flight. And you get there in 6 hours. You are pleasantly surprised. You're like, wow, that's great. Wow, we got here really fast. You beat the expectation of 8 hours. If you get on that flight and the flight attendant says, this is going to be a 4-hour flight, and it takes 7 hours, what are you doing? You're frustrated, you're ornery, you're upset. Why? Because the mental mindset was 4 hours, and now you're at the 7-hour mark. So if you're a trader and you say, I'm going to give this 6 months, and it takes 9, you've already quit. If you're a trader who says, I'm going to give it 2 years, but it takes a year, you're going, wow, I beat my expectation. Everything is about expectation. And we're going to talk about that as well in trade management, okay? See, guys, everybody comes in and they want to see this stuff. Right? I guarantee you everybody that's going today is going to show you some P&L somewhere. Oh my gosh, you can do this, you can do that. That's great. You're not going to get this till you've been a seasoned professional trader. It's going to take you years to have a P&L like this. All right? Took $2 grand into 6. It's going to take you years to get to this point. Okay? What I wanted to show by showing this equity curve, though, is that even professionals go through droughts. All right, this is a P&L from mine from, 15 years ago, something like that, okay? But I want you to note, and I got to go through it quick, there are periods where I went dead sideways for weeks at a time. Look at right here. The year starts off nice, and then for what, 2 weeks, I went sideways. I went up for a week or two, went sideways for a week, and then I had like a 2-month run, had a little pullback, another run, and then what happened here? From here all the way over to here. It was about, a month long? Basically, got up to this area, pulled back, and it took me about a month to get back to where I already was. And then another huge run, and then a pullback, and oh my gosh, my equity curve looks like a stock chart. Imagine that. Remember I said you could chart anything and everything? From pet rock sales to jean sales to whatever? You can chart your equity curve too. And you're going to have pullbacks. You want to try to stay away from the climactic type pullbacks, but you will have sideways areas, pullback areas, huge moves up. It's just part of the business. It's part of life. No one is perfect. They're human beings. All right? So even good equity curves experience pullbacks. All right? So I want to show you this real quickly. I do this segment every week. It's called When Will the Insanity Stop? And I do it for levity. I don't do it to harp on the people. I do it for levity, and I do it to show you guys this business is no joke. It's no joke. You can lose a lot of money in this business, and here's a great example. I'm not going to read all of this, okay? This person lost over $60,000, including his girlfriend's money. All right? This is an email. You can see it. To Jared. Dear Jared Wesley. All right? This person is a gambler. They're not a trader. They're a gambler. How can a new trader turn $300 into $3,000 in one day? How's that possible? You're new. Why are you even risking $300 on a trade? You're new. You don't have any business risking that kind of money. Just because you get lucky once or twice, I'm telling you, don't spend that money because the market wants it back. And it's going to get it back. All right? So when you look at this, this person has student loan debts of $40,000 and they're in debt $60,000. They borrowed money from their girlfriends, from their parents. Oh my goodness. Do you want to be this person? No. Risk small amounts of money when you're new. I do these every week, guys. I have hundreds of these stories. Some are emailed to me. Some I see online. Blew up $300,000 in options trading. Wow. Why do I show it? Not to harp on the person who lost the money, to show you that this happens to real people every day. So if you're not careful, this will happen to you too. You're not different. I don't care if you went to Harvard. I don't care if your IQ is 170. You're not special. You're not different. This could happen to you too. It absolutely could happen to you. I just hammer that home to you. All right? People do crazy stuff out there. Your job is to not be crazy, not do these crazy things that other people do. All right? When people come in and say, yeah, I blew up a trading account, it's a badge of honor. No, it's bullshit. Why would you, look, if you're smart, all right, and let's be honest, if you went to Harvard and have an IQ of 170, you should be smart. Well, then why are you risking so much money when you don't know what you're doing? You're not smart because this is new to you. You're letting like prior success in a different field affect you in this field. I don't care if you're the world's best construction manager. I don't care if you're LeBron James. LeBron doesn't know how to trade. I'll walk circles around him in the trading arena, but on the basketball court, he'll crush me. You're new to this. Be smart. All right? Live to fight another day. Risk $5 a trade. If you risk $5 a trade, lose $5, if you lose, how are you ever going to blow up a trading account? The answer is you can't, you won't, you wouldn't, you couldn't. So why are people blowing up trading accounts? Because they're dumb and they're stupid and they're idiots. That's it. I told you I was harsh. But trust me telling you that versus the market wiping out your account, you'd rather have me tell you that. Although there are the rare occasional egos where they'd rather literally lose money and satisfy their ego than actually confront their ego and save money. But anyway, most people sell too soon. They get out before their target's reached. They risk too much money too soon. They don't take stop losses. They use inconsistent risk levels. They don't have rules for increasing or decreasing their risk. They have no concept of expectation per trade. They just get into a trade and go, I hope it goes higher. Well, where's your target? How long is it going to likely take to get to your target? What's the expectation? I don't know. But I'm going to risk a lot of money on this trade because I'm dumb. Okay. They cut their winners short and they let their losers run. These are all great ways to be a losing trader. And yet, every one of us, including myself, I'm not special either. I did all of these things. This is why I'm so tough on people now, because I did all of these things. These cost me money, right? Being stupid, selling too soon, risking too much, not taking stops, all these things have cost me money, and I'm sure some, if not all of these things have cost you guys money. I'm here to show you how not to let them cost you money. So, live traders, we use what we call risk level, R units. That means every trade has a predetermined, you heard me, before we take it. That's what predetermined means. Entry, stop, and target. Entry, stop, and target. So here's an example. If I get into a stock at $50, that's my entry. I know my predetermined exit is $49.50 if I am wrong. If I'm wrong, I'm getting out of 49. It's predetermined. I don't do this soft stop stuff. Oh, let it go a little against me. No, I thought about it before I got in it, and that's my out. That's my exit. Okay? If I wanted to risk $500 on that trade, that means if it doesn't work, I lose 5. You would take 1,000 shares. So if that trade didn't work, you'd lose $500. You'd get out of $49.50, maybe a few pennies of slippage, maybe you lose $5.10, $5.20, whatever. Okay? But if the trade goes, say, $1, $1.25, then I'm going to make $1,250, 2.5 times the amount of money I risk. Now remember, new traders are going to risk $5 a trade. So in that case, you wouldn't take a lot of shares. You'd take 10 shares of this thing, right? 10 shares. And if it didn't work, you'd lose $5. If it worked, you'd make 10 or 15 bucks. That's how we keep things consistent, right? No one trade is worth more than another trade. And that's another problem with traders. One trade, they risk $20. The next trade, they risk $50. The $20 trade works and the $50 trade stops. That's no way to make money, okay? So when you look at trade management and money management, there's different ways to manage trades. But I'll tell you this, there's no one way that fits everybody. There's a million ways to manage your trades. You can manage bar by bar. You can manage on pivots. You can do a hybrid approach. You can do all or nothing. You can do moving averages. There's a million ways to manage. But in this case, let's use this breakout. You get in at $86. We talked about breakouts earlier briefly. Your stop loss is down here below there at 85.84, okay? And this thing moves up, consolidates, moves up. Now the question is, how are you going to manage it out? Are you just going to get out on the first bar and walk away? You could, right? You could be a scalper who's like, hey, I'm looking for 20 cents, I'm out. Okay, there's nothing wrong with that, right? Or you could say, you know, this stock looks really good. I think it's got room to $87. Well, how am I going to get there? Well, I'm going to manage it on pivots. It goes up, pulls back, goes up. And when it starts going higher again, you raise your stop loss. Pulls back, starts going higher again, you raise your stop loss. Now, trade management's a give and take, okay? It's a give and take. There is no one size fits all, and I'll show you that. You have to decide, and this goes back to personality. You have to decide, are you goal attaining or profit protecting? It's okay to be either one. And now everyone's thinking, why can't we be both? Well, that's the holy grail, isn't it? You can try to be that. But remember, if you want a huge target, you have to give the stock wiggle room, right? If you want to shoot for a $5 target, you're going to need to have some wiggles in there. There's going to be some pullbacks, there's going to be some bounces, some drops, etc. If you emotionally can't sit through that, then don't. Sell it on the pop, make your 20 cents and walk away. But if you want the $2 like the last chart we saw, then you are goal attaining. And goal attaining means you could give back some profits. Why? Let's go back to the last slide. See, on this move up here, you're going from 86 all the way to 86.60, 86.70. That's 60 cents. That's about what? 4 to 1 on your money without protecting anything. You have not raised your stop loss on this 4-bar move up. So what if it came all the way back down and stopped you out? That happens to traders sometimes when they're shooting for huge targets. So that you could use a hybrid approach. Say, all right, well, when it gets up like 2 to 1, I'll take 1/3 off. And then I'll let the rest of it go on pivots. That's what we call a hybrid approach. But you have to understand this word, expectation. What was your expectation before you got into the trade? Because you don't change after you get in. All right? That's when your mind is at its emotional worst. All right? So, you want to manage tighter? That's fine. You're just not going to hit huge targets. You might hit a 1-to-1 target, a 2-to-1 target. You're profit protecting in that. That's a tight management. You want a loose management? You're goal attaining, but you could certainly give back a lot of profits. So, hence, management is always a give and take. And management is always about expectation. Most traders don't even know the word expectation, okay? And they don't understand what it means to have a predefined expectation. If you're on a 1-minute chart, you are not goal attaining. You're profit protecting on a 1-minute chart. If you're on a 60-minute chart, you're goal attaining. Most people don't even recognize that. One of the beauties about this business, though, is this, what we call scaling. See, the beauty about trading is this. Once you know it, no one can take it from you. You see, a 1-minute chart is the same pattern I'm looking for on a daily chart. If I want to buy setup on a daily, the buy setup looks the same on a 1-minute. If I want to give myself a raise, I don't have to walk into my boss's office and beg him, like, I've been good this month, boss. I've been real good. No, you don't. You just add a 0 to your share size. But you don't do that randomly. You do that when your trade tracking spreadsheet and your results allow you to, because we also have what? Reasons to raise risk and reasons to lower risk, and they are defined by your results. We never do anything randomly. Okay? So when you look at one trade, this top trade made about $1, this bottom trade made about $1, they both made about $1. But one trade made $97 and the other trade made $4,000. Why? Share size. They both went about $1 though. But one made 4 grand, one made 97. More shares. One had, 4,400 shares. The other one had 100 shares. It's a big difference, isn't it? Okay. Same here. This is just a trade taken on ANET. I don't think it was that long ago, a month ago maybe. Gaps down, drops. I made $3,000. Why? Share size. Share size. That's it. Share size. You take a zero off the share size, you make $300. You add a zero to the share size, you make $30,000. That's the beauty of trading. Okay? You can take these patterns, this little bottoming tail shakeout, it moves higher. Made $3,000, but you could make less or more depending on share size. That's the beauty of the business. Once you spend the time to learn the charts, get your psychology in order, risk small amounts like $5 a trade. Once you get all that under control, scaling in this business doesn't take very long, right? It doesn't take very long. And I need to splash some water on your face for a little bit. All right, we just need to do this for a moment. Look, there's 240 trading days in a year. My goal is to make an R a day, 1 to 1. So if I'm risking $1,000, the goal is to make $1,000 a day. If I'm risking $5,000, the goal is to make $5,000 a day. If I'm risking $10 a trade, the goal is to make $10 a day. One R a day keeps the JOB away, okay? Risk level 1% is the max you should be able to risk of a cash account. So if you have a $50,000 account, you could risk $500. That's the most you should be risking. Now remember, it's for experienced traders only. New traders risk $5 to $10. $5 to $10. If you get 100 to 300% return in a year, you're a rock star. Don't let these people come in and tell you, oh my God, I made 29,000% last year. You can too. Maybe some people can, but that's unrealistic, right? Don't pay attention to Google ads. I got a Google ad that literally said I could make 5 million%. I should have put it in here. 5 million%. It was possible. That's the word they used. It was possible to have made 5 million. That's great. I don't live in fantasy land. I live in the real world. I work hard for my money, so I don't want to give it up easily either. So it's going to take 1 to 3 years to get it. No, you're not going to turn $143 into $1 million in 37 days. You've all seen the ads, all right? Risk $5 or $10 a trade. Now, we have about 6 minutes to get through psychology, and I got quite a few slides to get through. Guys, you are nothing without what's between your 2 ears. Everything we just talked about, you can throw out the window if your mind's not right, because you're not going to risk $5 a trade if you're mentally unstable. If you think, oh, but you don't understand, Jared. You just don't get it. I'm different. Okay, I'm listening. I just got laid off and I have 3 months severance. So if I don't get this in 3 months, my family's going to starve. Well, you might want to think about, a side hustle, another job while you're learning this, because you're not going to get it in 3 months. I'm just telling you, you're just not. If you do, great. You're the exception. You're like the 1 in a million. You don't understand. Baby needs new shoes. Mortgage has to be paid. Market doesn't care. I want you guys to, I really need you to internalize this for a minute. The market doesn't care about you. And you know what? You should love that about the market. Don't you hate when your boss cares a little too much about you? So much that you're working on Saturdays doing TPS reports? You know what I'm talking about. No, I don't want a boss that's overbearing. I don't want the market to care about me. You know why? Because he might discriminate against me if he cares about me. Right? I don't want the market caring about me. I want the market to leave me alone. That's why this is the greatest meritocracy there is. No one's going to tell you what to do and when to do it, or even how to do it. You get to decide that. You get to decide, do I want to listen to this Jared Wesley fellow? Is he an idiot? Or do I want to listen to this guy before me or after me and anyone else? You get that choice. But when you work for a company, they tell you when you get to come and when you get to go and how much you get to make. You don't have that in this business. So while the market doesn't care about you, and some of you think that's terrible, you should actually embrace it because it's the greatest thing ever. So mindfulness is one of the most important things a trader needs to learn. It simply means the capacity to be aware of your thoughts, beliefs, and biases in real time. And that last part's the kicker, in real time. Guys, you ever get into a fight with somebody and you say something you really didn't mean? You were not mindful in the moment. You ever get in an argument with your spouse and say something you totally regret? You were not mindful in the moment. What happened to you? Your emotions got the best of you and you said something you regret. Trading, when your emotions get the best of you, you'll do something you regret and it usually costs you money. So being mindful means understanding, wow, I'm very emotional right now. Whatever's going on in this trade has made me extremely emotional. I need to step away, walk away. I need to take a walk, set my stop loss, set my target, walk away. That's called being mindful. Emotion does not follow thought. Emotion comes before thought. That's the problem with traders. They do before they think. It's like being in an argument with somebody. You get overly emotional and you say something dumb, and it's really hard to walk it back. Trades, it's really hard to walk the trade back once you've made a dumb decision. Okay? So emotions are triggered when there is a disruption of a familiar or established pattern. A shakeout bar happens. Like, what the heck? I just got stopped out on the penny. Screw this. I'm getting right back in. Well, that was an emotional decision. You didn't really think through that very much, did you? And that might cost you a lot of money. We create our understanding of our world from our adaptations to our deepest fears and desires. Great quote, right? So you have to develop mindfulness as a tool to step out. It's almost like stepping out of your body and looking at it and going, whoa, dude, chill. What are you doing, man? Most traders don't have this, okay? Everything you do has a cause and an effect. You have to determine why you want to do this business. What's the reason for doing the business? What's the reason for selling too soon? What's the reason for not taking a stop loss? You have to understand the core reason why you're doing it. Because if you don't know the core reason, you're going to be in denial, right? Because everything has a cause and effect. You see, sometimes traders, they like to win the battle, but they lose the war. They can't give in to their ego, right? Their fear of loss is stronger than their hope for gain. Okay? So they sell to, oh, it's green, I got to get out. And they're happy in the moment. They won the battle. And then 2 hours later, when the stock's up $3,000 and you took 100, you lost the war and you're pissed off at yourself. You see where I'm going with this? So it's that immediate gratification. So what you need to be doing is short-term pain for long-term gain. Okay? So it's a process that you have to go through. And you have to write this down in your journal. You're going to have a trade tracking spreadsheet, which we'll talk about in a minute, but you're also going to have a journal. This is why I think videotape, this is why I put the camera on. A lot of people don't put the camera on. I record myself a lot of days. And I go back and replay it. I have a little mic on my desk and I have a camera. It's like, wow, man, you were out of control there. What were you doing? And then you go look at the trade you were in. What elicited that emotion? What elicited that response? So now I know when that happens again, oh, this is a trigger warning for you. For all you snowflakes, it's a trigger warning, right? So emotions and psychology are everything in this business. They're everything, okay? So the more objectively and accurately you define yourself as an individual trader and build your style around it, the more successful you'll be. You have to have outcome goals, but the process goal is far more important. If you don't have a process goal, the outcome is just a pipe dream. It's like putting a poster of a Lamborghini on your wall. Great. Who cares? How are you going to get it? Right? How are you going to get it? You need the process. So you have to ask yourself, well, what's my available time? What's my personality? What are my financial resources? What are my personal preferences? What does all this mean? It means when you figure this out, now you know the right time frame to trade on, 1 minute, 5 minute, daily, weekly. Now you know how to manage your trades better, pivots, bar by bar, all or nothing. Financial resources will help you understand what your risk level should be, and your personal preferences will affect all of those things, okay? So while I'd love to sit here and tell you more and more and more, I have to, shut this down in about 3 minutes, and then I'll open it up to some questions. But look, this is what's required to be good. Because most traders have no idea. Let's just be honest. You just don't really have an idea. You don't know what you don't know. So you need education and guidance. You need a well-defined trading plan. This is your roadmap. If you go to a bank for a loan, the first thing they ask you for is a business plan. How many of you actually have a trading plan? A legitimate trading plan. Not written on a little napkin. I mean, actually written out, 3, 4, 5 pages. A plan of how you're going to go about the business and where you're going to be 6 months, 12 months, 18, 24 months from now, and how you're going to get there. Okay? You need objectivity, and humility is a big one in this business. Look, I'm telling you flat, you're going to get punched in the mouth once in a while. You're going to have to be able to get up off the mat. It's going to happen to you, right? Sometimes you're just going to tip your cap and say, too good. You ever see tennis players? They clap the racket and they go, just too good, right? Everyone has a plan until they get punched in the mouth, right, Mike Tyson? Right. You're going to get punched in the mouth by the market. What's your plan, though? How are you going to bounce back? And then experience. All these things people teach and tell you, they're great, they're wonderful, they're helpful. But without this last one, they don't mean much. I can tell you everything to your blue in the face, but until you actually get out there and have the market kick you around, you won't understand, right? So you have to go out there and get beaten around a little bit, all right? So roadmap to success. Trading's a business. Treat it like one. If you don't even start. It'll be the most frustrating thing you've ever tried in your life. Choose a defined method and immerse yourself in it. Don't try to pick 40 different ways from 40 different people, okay? Choose a time frame you'd like to trade. Day trading, scalp trading, swing trading, core trading. Set parameters for the stocks you'll trade. Hey, I'm going to trade $500 to $100 NASDAQ stocks that do 2 million shares a day. And again, as you get better, you'll expand that, okay? Time your entries with market internals, trade and money management that we talked about, and then, of course, the discipline and patience to follow the plan and the method. Because none of this matters if you don't have the last one, okay? So, I don't even have time to get through this. I have 2 more slides. I'll just put it up there so you guys can take a quick picture of it. I just don't have the time. I will say this, though. Trading is the great equalizer, guys. You can be a high school dropout or a Fortune 500 CEO. The market doesn't care. You know why? Because it doesn't know you. How could it care about you if it doesn't know you? We're all the same to the market. Your ego and experience in other professions doesn't give you an advantage or a disadvantage here. That's the beauty of the business, okay? And lastly, money. This thing's hard. This business is hard. Money management's everything. Simulators are not real. It's going to take longer than you think, and shit happens. Okay? Getting filled isn't easy. Internet problem. Guys, remember this morning. What happened to the market? Anybody that traded today? The exchange had a problem this morning. The actual exchange had a problem this morning. Shit happens. Okay? We got out of a trade because of it. Cost us probably a couple grand today. Cost us a couple grand today. Oh, well, shit happens. We didn't lose money. We didn't make more than we should have. There's no holy grail. Have a plan. Okay? And then good things will happen. Focus is everything. You have to have a daily routine, guys. Note, I put this out there. Before the market opens, 926, CAT under 130.50. CAT is likely the best gap of the day. We should look to find an entry in it. That was 10 minutes before the market opened. We find an entry in CAT, make money. Now,